The fourth dumb thing is kind of counterintuitive, but you don't invest money in yourself. So this is where now you finally have some money. You got some money in the bank and now you want to be protectionary of it. You want to protect that money at all costs. So you don't want to get rid of that money. You don't want to spend it. But sometimes you not spending money can be more expensive than you actually spending that money, because when you don't want to spend that money, you don't want to pay somebody else when you can have your own time. I see this so much in real estate. If you were to go out and invest in a rental property, you could be the one that manages the property, because now when the tenant has an issue, yeah, you could take the phone call and deal with the issue. You can be the one to make sure the bills get paid. You can be the one to make sure the property taxes get paid. But I don't want to have to do that. I don't want to manage my properties. I want to be an investor. And this is where I pay to have a property manager. Now this property manager is going to have a fee. They're going to take a percentage of your rents every single month. And a lot of real estate investors will say, why the heck would I pay a property manager 8% of my rents, 10% of my rents, 12% of my rents? That's money that I can keep in my pocket. It's just a little bit of time every single month. I can just deal with it myself. But now you're not valuing your time, and then you're never going to be able to scale, because if you have a few more properties, well, you are spending all of your time managing, and you're not going to want to scale to the next deal because you're going to be fed up with dealing with tenants and dealing with the headache and dealing with the problems. Managing is very different than owning. I want you to be an owner. That way you can work to build that wealth. Maybe that's with mowing your lawn. You don't want to pay somebody to get that hour back every single week. Maybe it's for cleaning. Maybe it's for driving you around. Maybe it's for helping to cook food. That way you can save some of your time. Maybe it's you investing that money into your own mind, because you say, you know what, I worked so hard to save up these few $1,000s, this $5,000, this $10,000. I don't want to invest this money into a book or a class or some research reports or to whatever, because if I spend $500, that's $500 that leave my bank account. But if you can invest in your mind, you spending $500 could help you earn $5,000, maybe $5,000 a month, depending on what you're learning. But you have to be willing to invest in your own mind. That way you can learn how you can grow your mindset, because a lot of people have this scarcity mindset where we think, oh my God, if I spend $500, I'm losing money. But what if you can spend $500 to make $5,000? This is that growth mindset that some people have. They can allow you to reach much bigger heights, but you have to be willing to actually spend that money and know when it's okay to let go of that money if it's going to bring you more value in return. And then of course you got to be willing to spend that money to grow your money. And I'm not talking about investing in your own knowledge. I mean to actually invest your money. A lot of times I've come across people that will have money in their bank, but they don't want to invest it because investing is risky. And I've come across some people, particularly high-income earners like doctors, who will have six figures, hundreds of thousands of dollars, sometimes even millions of dollars, sitting in the bank earning 0.5% a year, because they don't want to take this money and invest it into the stock market or into real estate or into really any asset, because what happens if markets crash? What happens if I pick a bad investment? And that's obviously a concern. Investing is risky. You're never guaranteed to make money when you invest. You will lose money at some point, which is why you need to make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But here's the thing. When you save your money in the bank, you're guaranteed to lose. Because if you're earning 0.5% a year, even 3% a year, you're still losing money. Because if you're earning 3% a year in a high yield savings account, the first thing is you got to pay taxes on that money. So you're really not netting 3% a year. And now you have to factor in inflation. And you might say, well, even after taxes, Jaspreet, I'm earning more than 2% a year on my savings, so I'm beating inflation. But remember, the 2-ish% inflation numbers that we're seeing is the reported inflation numbers. That doesn't mean it's the real inflation that many people are feeling, because the real inflation that a lot of people are feeling are higher than the actual reported numbers, which is why when you save your money, even in a high-yield savings account, you're guaranteed to lose. Now, when you invest your money, you can lose. You can lose every dollar that you invest. But you have the potential to gain money as well. And if you just invest your money into something simple, like say the total stock market or the S&P 500, which is a group of the 500 largest companies in the stock market, and yes, there are funds that allow you to do this. You don't have to go out and invest in every single company. I'll show you exactly what I mean. There are funds like VTI that give you exposure to the total stock market, and SPY, they give you exposure to the S&P 500. Now, I'm not recommending that you go out and buy these. I can't do that because I'm just a random guy on YouTube. But what I'm saying is, if you just wanted to invest your money in the stock market for the long term, this has been proven to win over the long term. Now, this doesn't guarantee that you're always going to make money. In fact, we've seen a lot of recessions in the past. We've seen a lot of market crashes in the past. We're going to continue to see market crashes. We're going to continue to see recessions. But history tells us that in the long term, markets go up. Now, could that be wrong in the future? Sure, yeah, maybe. But that's what history has told us. But you'll never have the opportunity to see the potential upside if you never invest your money. And then the fifth dumb thing that you can do is invest like you're in Las Vegas. Investing your money, like I just talked about, is a slow but almost guaranteed way to build wealth over the long term. Not over 6 months, not over 5 years, but over 10, 20, 30, 40 years. It has been proven, and it's a pretty sure way, not 100%, but a pretty sure way to build wealth. But a lot of people look at that and say, well, Jaspreet, I don't want to wait 30, 40 years to build my wealth. I wonder if there's something sooner. And if you're getting started and you don't have a lot of investing experience, you're going to start Googling different ways that you can start investing money, how to grow your money faster. And now you're going to start learning about these other opportunities that can double your money in 6 months and get you these 1,000% returns. Maybe you start investing in pink sheets, meaning penny stocks. Maybe you start day trading. Maybe you start looking into options. Maybe you start trading meme stocks. Maybe you start trading these hot cryptocurrencies that have the potential to pop off. It's these super speculative investments, which, yeah, they can have a small piece in a regular person's portfolio, but what I've seen happen for a lot of smaller, younger, getting started investors is their entire portfolio is 100% speculative because we don't like the idea of waiting 30 or 40 years to see wealth happen. So instead, let me just try to YOLO my money into these dumb investments and hope for the best. And now what ends up happening is you hope you're gonna get rich quick. You end up losing all of your money and you never build wealth. So you gotta decide. Do you want to have the rush and excitement and never build wealth? Or do you want to have the long-term sustainable wealth, not have the rush and the excitement, but actually have the potential to build real wealth with much less risk? And a lot of people take the first option, they get burned, they hate investments, and then they say, I never want to invest my money again. But this is weird. If you really want to build wealth, you can take the fast and exciting route and test it out, and when you get burned, remember that the other route, the way that you actually become wealthy by long-term investing, is there, but you have to be willing to stick with it and go through the ups and downs and keep learning. That way it can work to grow your returns and get potentially a little bit better returns, but being smart with your investments is how you get there. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.